You need to do these 3 things to start winning at trading now. You see, new traders think it's as easy as downloading an app like Robinhood and start market ordering in orders and out of orders and following just some random indicator that somebody on Reddit told them it was the holy grail of indicator. And you might have started to see some early on success doing this. However, you've probably noticed that you're losing those gains rather quickly as market dynamics and trends shift due to macro events. But if you do the following 3 things that I'm going to share with you in this video completely for free, it's going to increase the odds in your favor in order for you to have a better chance at winning as a futures trader. Now, I want you to pay close attention because what I'm going to go over with you in this video is going to change the way you look at trading forever. Before we jump in, I want you to answer me one simple question. And that's, how long have you been trading? Drop it in the comment section below. Smash that like button, subscribe to the channel, guys, and let's go ahead and get into it. Now, you might be asking, what are the 3 things? Very simple. The very first thing that we're going to discuss is going to be how to be a good loser, all right? And then we're going to go off into trading proper setups, and I will show you some proper setups. And then we're going to go over one key factor at the very end that is going to absolutely revolutionize the way you approach trading every single day. Now, the very first thing we're going to look at here is being okay with losing. You need to be okay with losing. I know it's difficult. I know it's extremely hard for one to grasp that and be like, oh, but I don't want to lose. Losing shouldn't feel good. You're right. Losing shouldn't feel good. And losing doesn't feel good. However, when you learn to trade your system properly, you are going to be okay, or you need to be okay with losing, because you're never going to be right 100% of the time. It's completely impossible. No trader in the history of the world has ever been right 100% of the time over the long haul. You might have a week where you're right 100% accuracy, but you ain't going to have years of 100% accuracy. That's not going to happen. So let's get good with losing. Forget about everything else. Being able to sit here and take a loss on a trade and look at it and be like, damn, I'm proud of myself. Somebody that's untrained is going to look at you and be like, what do you mean you're proud of yourself? You just lost $300. Yes, but if I didn't cut it here, I'd be down $900. I'd be down $9,000. Why are you happy with it? Because you traded the trade plan. Being okay with losing is absolutely essential, because if you're not okay with losing, you're going to hold on to bags, meaning you're going to hold on to losing trades that could eventually wipe out your entire account. I bet you right now you're thinking about that one time where you held on to a bag so much so that you either blew up a funded account with a prop firm, an evaluation, or your hard-earned money that you grabbed from your bank account, put it in a trading account, held on to that trade far longer than you should have, knowing damn well that it wasn't looking good. Talking to you, AMC. So yes, you got to be careful with that. You have to be willing to take the loss, have to be okay with losing. It is absolutely essential. Now, let me give you a couple little tips here. Learning to be okay with losing, learning to train yourself to being okay with losing. Number 1, trade in a simulator. If you put yourself in a simulator, you trade real-time data, you trade real-world plans, and you stop out when you're supposed to stop out. You train yourself up to being okay with losing. Now, if you feel that a simulator doesn't carry the emotions that you need to be able to feel like real money, and you just treat it like a video game that doesn't matter because there's no skin in the game, then my big time suggestion is going to be to start trading for a prop firm. Get yourself an evaluation account that you can trade, and then if you pass it, you get a funded account where you can trade and actually make money. Now you have skin in the game. Why? Because you've had to buy the evaluation, and there's a goal, with a specific goal in mind of passing it, so that you can actually start to get paid to trade. Now, I trade for a prop firm. The link in the description and comment section of this video. You'll find my coupon code, which is all caps JesseW. You can get a massive discount with my coupon code, sometimes up as high as 90% off. At the time of shooting this video, actually, it's 90% off. Now, when you watch it, it might be only 80% or 50%. I don't know. But one thing I can guarantee you is that my coupon code will give you the best and deepest discount available at the prop firm. And now you can go ahead and trade with some skin in the game, and you can feel those emotions. And now you're still within that safety net of not losing hundreds, thousands, tens of thousands of dollars of your hard-earned money as you learn to become a better loser. Very important. You need to be able to be okay with losing. Those 2 tips are my top tips for you to be able to learn that. Now let's move on and go to the next one, which is going to be learn to trade setups like this. Here's the next step. This is how you're going to win at trading, increasing your odds at success. It's trading good patterns, good, strong, proven, risk to reward chart patterns that are going to help you stay in these trades, that are going to help you minimize loss. One thing that you've heard me talk about on the channel here a lot is making sure that you're putting yourself in trades where you're risking maybe $1 to make $2, preferably $3. All right. So that goes hand in hand with, if you risk $100, you should be making $200 to $300 on the trade when you're right. So when you're wrong, you lose $100, but when you're right, you're making $200 to $300. Those are the type of patterns you want to put yourself in. Here is one that's a perfect example of that. Right here, you can see a very nice little bear flag formation. Okay. And you can see I'm short right here underneath 15,980, using that 15,980 to 15,990 zone as resistance. Okay, so if I'm short from 15, which you can see here, all these red little arrows are my short. If I'm short here in front of, well, just above in that general area of 15,980, I'm risking about 5 to 10 points in risk for what? A move back down here near 15,955, 50. You're talking about massive gains, and you can see it here clear as day as I add into this position and take profits here, right? So if I'm short from 83, 80, 78 in those general zones, 78, okay, 77, and I'm taking profits off at 60, I'm taking profits off at like 55, and I'm taking profits off underneath 940. Guys, I was only risking 5 to 10 points for the shot at my best take profit practically being 40 points. Those are the type of patterns you want to put yourself in, where you can identify clear zones of stopping out and then being able to enter your position as close as humanly possible to that zone, be it a long setup or a short setup, where you're only risking, 1-2 points for the shot at making 2 to 4 points. Now, obviously, in this case, we got to add a 0 at the end of it. I'm risking about 10 points for the shot at making up to 40 points. That's a 1 to 4 at my best take profit. That is humongous. And those are the type of setups that you want to be able to identify, learn. Those are the type of patterns you want to be able to identify and learn. That's a bear flag there. You have so many patterns: bull flag, head and shoulders, reverse head and shoulders, cup and handles. The list goes on and on and on. And we can go over more of those in future videos. But for the sake of this video, I'm just showing you this one pattern. I'm showing you exactly what I trade. I'm showing you exactly one of my trades, where you can clearly see the stop out zone. Once you identify that stop out zone, you can really be at peace because you know where your max loss is going to be at, and you can see where your profit zones are going to be at, and your profit zone or the risk zone. Those are the type of setups you want to be partaking in. Those are the type of setups you want to be playing with. And the final piece of the puzzle, guys, it's super big time more important than anything else, I think, in my opinion, because it's all about mental. It's mental in the sense that you have to be patient, guys. Think about it like this, okay? You went to school for X amount of years, and then you graduated high school, and then you went off to college or university and you studied X amount of years to get into some sort of profession. Or right after high school, you went and you learned a trade that took you X amount of years to learn. During that learning process, there was a lot of work that went into it and a lot of time. It takes time to learn it, just like it took time to learn your career. And during that time, you're going to have headaches, you're going to lose money, you're going to not feel all that great because it's a part of learning. If you're not feeling some of that while you're learning, then guess what? You're probably not learning a damn thing. So be patient. If your typical schooling, right, is 4 years for a degree so you can go off into some career, then what makes you think that trading is going to be any different? If you want this to be a part of a career, if you want this to be even a part-time career, then you got to be willing to put the time in. You got to get mentally strong because it's going to take time. You're going to lose. You're going to lose sleep. You're going to feel bad. It's a part of trading. It's a part of learning to trade. So you need to be able to be strong in the mind, knowing, hey, I don't think that I'm going to figure this out in 6 months. I don't think I'm going to figure this out in a year. But it's going to take me some time to study and learn. It's going to take me some time to study and practice and click the buttons and practice these setups. That's going to take time. So figure out how much time you think that is. And my friends, multiply by 1.5 to 2. And then if you're ready to put that commitment in, if you're ready to study, if you're ready to learn, if you're ready to practice for a year, 2, 3, maybe 4 years, then that's what it's going to take. And that's what the time you're ready to put in and try. Now, let me give you a time frame that I think is rather normal and kind of worked for me. The first year, it's about learning verbiage. It's about learning how to identify patterns. It's about learning what type of trader you are. The second year is really about practicing and trying hard and putting what you learned in year one into practice via maybe a small account, or better yet, a simulator, or better yet, the prop firm. If you're gonna do it that route, give yourself a year, because market environments change and they often change rather quickly. And when they change, you might not even notice it. So if you were really good for 3 months, you could suck the next 3 months. It's the reality of the game, my friends, because the market could be in a downtrend for 3 months where you're killing it as a bear, and all of a sudden it shifts to being bullish, and you're like, oh, what happened here? The setups that were working 3 months ago are no longer working. This is why you need to expose yourself to long-term, at least a year of trading before you decide what you want to do. So definitely give that prop firm or the simulator a try for a whole year. So you're gonna go ahead and figure out what type of trader you are on year one, put a little bit of practice into it as well. On year two, you're really gonna hit it hard, trying to click those buttons, put those plays on, try to do it in the safety of a simulator or of a prop firm. On year three, in my opinion, you should be looking to break even. You should be looking to break even or a small loss on the year. Let's say you started with $1,000, okay? On the year, let's say, if by the end of the year, you're still at $1,000, pat yourself on the back, please. If you lost 900, 800 bucks, pat yourself, well, not 100 or 200 bucks, meaning your account balance is $800, $900, pat yourself on the back. If you blew up the account, but you're ready to keep going, you figured out what your mistakes were, pat yourself on the freaking back. You learned something, okay? And if you made some money that year, if you turned that $1,000 account into 2,000 bucks that year, yo, applaud. Good work. On year four, if you figured it out and you've finally put on profit, you should start to look to make money. You should start to look to scale that business up, because believe it or not, this is a business and you are the boss. That's at the point where you start to scale it up. If you're trading for the prop firm, you should be looking to get these payouts. At the beginning, when you're trading for the prop firm and you pass an evaluation, look, you're probably gonna blow up your first PA, your first funded account. You're probably gonna blow up the first few of them. It's gonna happen. Hopefully you can pull out some profits before you blow it up, but the blow up is gonna come. It's gonna come. It happens to all of us. It's happened to me, okay? So it's gonna come. Be good. We go back to the first one. Be good with losing. Be good with losing. Losing is a part of this game. So those are the 3 tips that I can give you here that are going to help you start becoming a better trader and increase your success as a futures trader in 2024, 2025, 2026, every single freaking year that you've watched this video. Guys, remember to smash that like button for me, subscribe to the channel, hit the notification button so that you're alerted when I upload my next video, and I'll catch you in another one. Peace.